Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar, the majors for June 26th to June 30th, 2017. And the story of the week is dollar disappointment. It really is. There's low volatility trade, absolutely not much movement. In fact, one of the tightest ranges we've seen in a very, very long time. And as we came to the end of this week, very much an expression, I think, of dollar disappointment. And in many ways, it has nothing to do with FX. I think the only important factor really for next week as well as last week is this, the 10-year yield. The 10-year yield is at 214. It was at 220 just a little while back. And the 10-year yield is pretty much going to be the driving force of where the dollar goes. The bond market simply not buying the Fed's hawkish posture. The employment situation, the economy situation, and most importantly, the inflation situation in the U.S. just not strong enough to really generate the kind of excitement and enthusiasm for the dollar that the Fed wants to see. So we're seeing just basically a very blasé move against the dollar across all the major sectors. And as far as resistance and support goes, we're pretty much at the same levels. I mean, the amount of volatility that we saw this week was probably one of the smallest, tightest ranges in a very long time. It was literally like watching paint dry most of the time. And we may very well be for another week of very low volatility because we don't have any serious event risk until the week after, until the July 4th week in the US. So for now, the resistance in the euro is still 113, 111 to the support side. Dollar yen really showing that whole hesitation at this 111.50 level with 109 now the key support. And cable just kind of following its own tune because, of course, cable is really a story of Brexit and nothing really on the economic front. Let's take a look at the calendar and just see exactly what's going on as far as the data set next week. So we have IFO beginning of the week, but that's not going to be that much material. Tonight's PMI data from Eurozone was mildly disappointing. Even if this is an upside surprise, I don't think it has much of an impact on the euro. The euro is really trading much more on anti-dollar flows than anything else. Durable goods, another potential here for disappointment in the U.S. economy. We really, in many ways, for dollar to really catch a bid, we need to see some upside surprises in the U.S. data, and we really haven't had much. The only upside surprise last week that we had was existing home sales. This week we don't even have that much on the plate. We have the durable goods data, we have the consumer confidence data coming up, and then we have the trade balance. None of this is really material as we go forward. And then, of course, at the end of the week, we have the GDP. That's a revision piece, so maybe that gives us a little bit of a bump up. But if it doesn't, it just simply plays into the whole tune that it's just blah, 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 blasé, and that's really the theme that we're seeing. Nothing on the UK side, not much on the European side. You can see it's just incredibly bland and blasé as far as the event risk goes for this week. Let's take a look at the charts here, and I'll show you exactly what I mean. So here's the key thing that I think, oh, I'm on the weekly charts. That's a little too much. I want to show you the daily charts first. So here's the interesting thing about the daily chart, though. The daily chart on the euro clearly showing that we've held this very nice support at 1150, and we are looking to come back and perhaps even make a run towards this 1250, 1300. Now 1300 is a very hardcore resist point, but from here to there, which is 100 points, which seems not like a lot, but that could be a week's worth of work. There's a strong possibility here the euro excuse me, is turning up. And the reason why the euro is turning up, of course, I think in many ways is just simply that 10-year yield. If you see that 10-year yield drift towards the 210 level and maybe even unthinkable towards the 2% level, the euro just simply goes up as dollar disappointment kicks in. And you see the same story here in dollar yen. Look at dollar yen just simply stalling, finding we thought we had a very nice decent base here, and we thought we had a chance to take out the 112, and the fact that we failed at the 112 is a key tell that the U.S. economy and the data here is just simply not enough to get excited about pushing dollar yen forward. There's a lot of sellers on this level, and they really need to be taken out. So you need a very swift short covering move in dollar yen to kind of reestablish the dollar predominance. And so far you're not seeing it. And if you don't, the natural course of least resistance now comes to the downside towards the test at a 110 support level. Now at 110, very likely we are going to form a higher low, which ultimately will probably be bullish longer term if the U.S. economy catches a bid. But for now, you're just seeing very, very blasé movements in the off of summertime nothingness. And of course, cable, its own story. Now the cable story is very hard to handicap simply because I'll blow this off here. Simply because it's really a story of Brexit and nothing else. There's no real UK economic data. UK economy clearly has shown some slowdown since in the last couple of months, really since the beginning of this year, as the full impact of lower cable starting to disseminate itself through the UK economy. And it still appears to be that A, there's no government in the UK. They're still negotiating with the DUP. B, it doesn't seem to be like they're making any significant progress on the Brexit talks. So hard to get too excited about it, but the market is still very much giving cable the benefit of the doubt. And of course, there's still potential here for anti-dollar flows to push it up. But we had the one big event last week that we had was Andy Haldane saying yes, he thinks he needs a rate cut. Never going to happen. I think it's insane to assume that the Bank of England is going to raise rates amidst what looks like to be a slowdown in the UK economy that could very seriously turn into a recession. So it would be a massive policy error if they raise rates. That's why cable to me is a sell the rally on a fundamental basis, a sell the rally trade. But it's such a vicious, volatile trade that you either have to give yourself just a massive amount of room, all the way literally to 130, to kind of let a lot of these trades work themselves out, or you simply stand out of the way as political risk just simply overtakes the economic risks. If we do drift below here, the vulnerable point for cable to me is this 126 level. If we drift below that, that really seals the coffin and nail and puts a very, very negative technical formation in cable, takes us all the way down to 125, would complete that whole Theresa May breakout rally all the way down symmetrically to the downside. Still like, I think, the relative trade of euro to pound in many, many ways on a fundamental basis, and we'll take a look at it on a technical basis when we look at the crosses. That still seems to be the most interesting trade here in the amongst the majors. So that's pretty much it. Not much action, not much event, just simply, accept the fact that you're going to have a low volatility environment with a mild bias of anti-dollar, euro dollar possibly making a move towards the 1250 as the week progresses, and dollar yen possibly drifting towards the 110.50 as the week progresses. That's how we set up as the week goes up. Wish you guys the best luck, the best trading. Boris Landsberg, over and out.